Hey guys, how's it going? I'm getting this room started for Donnie real quick. Let me just set this up and then I'll send out the link to him and then I will send out the link to you guys. So I guess I'll start sending out these links, guys, because it seems like everyone, likes sitting in on these mentoring sessions. So I can go ahead and just send them out so you guys can learn from this. But yeah, I mean, it actually works better for us that way. So everyone can get their questions answered. All right, so I'm setting up this room real quick. Unfortunately, there's no trades available for Forex. I did look through the entire chart. There's the market's just not moving smoothly today, which is normal. It's NFP week. So there's just no Forex trades right now. I'm looking for some scalps though. So that's what I'm currently looking for at this time. If I see anything, I'll call them. If not, we'll just obviously we'll be waiting for them to appear. So let me finish setting this room up and then we should be good to go. Send this link over to Johnny. And then he should be coming in shortly. So let me just go ahead and let me just send this link out to you guys here. There you go. Copy this over here. All right, so we're just waiting for All right, guys. So I'm not sure who's in this room. Let me just pull up the chat real quick. Looks like there's only a few people in here. I'm just waiting for Donnie to show up. He's fixing his mic real quick. And then once he's ready, we're going to get started with this session. So I'm not really going to be able to answer questions here for the public. I'm just going to be helping out Donnie. So if you guys want to sit in and listen, you guys are more than welcome. But we will, we'll get started shortly. Just waiting for Donnie to show up. And then we should be good. Hey, Donnie, how's it going? Can you hear me? I think your mic's still off. Or it might be a mic side issue like last time, Donnie. It's all right. I'm gonna sit tight, just wait for you to get that fixed up, and then we can get started. See if there's any trades here. Meanwhile, check out the DAX real quick. Looks like a sell here for the DAX. No, actually. All right now. Set up right there. Hey Donnie. Oh yeah. So Donnie said, yeah, my mic is still going crazy. Yeah, go ahead and fix it, Donnie. I'm not. There's no rush. So I'll be waiting here whenever you're ready. I'm just looking for trades, anyways. Um, Forex market is pretty slow right now, so I'm just looking for some scalps here for these indices. Let's see. No scalps here right now. We'll be looking for some shortly. So Trell, I'm not sure if you're in this room, Trell, but I did see your question in the last mentoring session, so I didn't get to your question. But Trell was asking, how do we get the zones for the snipe strategy? If there's no zones here on the 10-minute, then we don't look for any other zones. I mean, technically, you can go on the higher time frame or even the lower time frame to find other zones, but I don't really recommend it. I just stick with the zones that we have at that specific time, because these zones are going to get kind of messy. Like for example here, I mean, you can possibly do that and just color them a different color, but I personally don't do it. So if I go here back on the 10-minute, yeah, I mean, there still wouldn't be any entries anyways, if that was the case. Go back on the 30-minute here. See if I could find, yeah, because they overlap sometimes. Like this is a huge zone right here. I don't know if I'd run a, see that real quick. Zone up here, zone right here. Go back on the 10-minute. Yeah, I mean, even if we drew these other zones here, there still wouldn't be any entries. And the reason why I don't look for zones on the hard time frame is because at that point you're just forcing trades, right? The strategy doesn't advise that we do this. It doesn't teach that we do this. So this is why I don't go on the hard time frames to find zones when they're not there. I only go for zones when they're actually there on the 10-minute. So if there are no zones here, then I just wait for an entry, right? I don't just go and try to force trades, because that's kind of what happens with a lot of people. They try to force trades, they get bored, they take trades that aren't even there, and they try to like create trades. And by doing that, you take on too much risk, and odds of you getting stopped out are very likely. So I don't recommend going on hard time frames to find zones. If there's no zones there, you would just have to wait, for an actual zone to come up. So just keep that in mind, guys, for a lot of you guys that are like looking for specific zones, because sometimes you're gonna take some unnecessary risk that you probably shouldn't have taken, and then you're gonna end up getting stopped out of a trade. And you're gonna wonder why, and you'll know exactly why, because you try to create a trade out of thin air, basically. But all right, let me see if there's something else here real quick to look at. And check the chat. Yeah, guys, we're still waiting for Donnie. He's just fixing his mic right now. Once he's here, I can start. We can start a mentoring session where I'll be helping him with his trades and whatnot. Let's see, Alan's asking, so without zones, is more challenging to find scalps. How would you know where to enter trade? So Alan, if there's no zones, there's no trade. Yeah, I can hear you, Donnie. All right, perfect. So Donnie's here. All right, so we're gonna get started with this mentoring session. I can hear you, Donnie. Let's see, can you hear me?
Yep, I can hear you.
Perfect. All right, man. How's it going?
Good.
Man, good to hear. All right, so let's get started.
All right, so first, hold on. Did I already tell you about how my week went with FTMO so far?
Not yet. How'd it go?
So pretty. I guess I'm back to not even back to break even. I was at break even on Wednesday. Today was like -400. Yeah.
Oh, well, what account size are you doing?
10. So it's 4% drawdown, basically.
Okay, that's not too bad. I mean, you're still in that range.
Exactly. I just waited to 6 o'clock, so I stayed within my daily limit. So and it was literally just like the heavy spikes. Like I mean, I'll share my screen through in a minute, but it was between it was right after I got kicked out of the one you posted. Like let's say it's like as soon as that got kicked out, I was like, well, all right, I see it rebounding off the next zone. So I was like, let me get into that. And man, like those spikes were just like vicious between like 12 o'clock and like 3:30, and I was like, well, let me go on a higher time frame. Maybe that'd be better. I was on a 15-minute and same
Same
thing.
thing,
Like,
right? Yeah, yeah. If that happens, don't go to another time frame because if the market's just choppy on like during a certain time, it's going to be choppy on all time frames. And like in that situation, you're kind of just forcing trades, right? You're trying to make trades that aren't really there because you're going on a higher time frame. So yeah, I mean, if that happens, then it's better to just sit out the market. If you have like a specific timestamp for that, we can go back and look at it to see if you did anything wrong, and then
yeah.
we can move on from there because that's probably the best option.
Okay, let me see where I have it set at. Today's the 3rd, and this is 10 in the morning. So this one would have been right. Okay, yeah, hell yeah, it would have been right here. It would have been at 2 o'clock.
Today, or is it
Yeah, today.
okay, 2 o'clock today, your time or my time?
My time. So it'll be should be 11 o'clock your time. So 11 o'clock your time. I entered at, let's see, 31, this is 426.
Go back over here real quick. Sorry, so you said 11 a.m. my time, right?
Yeah.
Okay, let me just go. I just wanted to open the clean chart. So that's actually a risky time to trade because usually, I don't know if you follow my live sessions, by like 10, I usually stop trading because that's usually when the market starts to reverse midway through market. So let me just go to 11 real quick and I'll see where you were looking at.
I didn't know that. Okay.
Yeah, so like here, I'll show you real quick. So like basically the way that the market moves for US 30 is I'll mark it from market open right here, which would be, let's see, vertical line. Market opens here at 6:30. Usually a US 30 moves in two impulses. So like from market close to market open, it shifts. Let's see. Till 13, yeah. So this is the US market right here. So you can see from market open right here, it goes up, right?
Mhm.
And then once it hits 10, I'll just mark it up right here, 10 o'clock, it reverses the other way. So usually we don't trade during, like once it hits 10, this is where we call it a day. We're like, all right, we're gonna take a break. Because this is when the market starts to shift in the other direction. It happens the same way every day. Most of the time it plays out. Sometimes it doesn't. It'll just keep pushing in one direction. But I'll show you yesterday too, because it was the same exact thing that happened yesterday too. So like, for example, here, 6 up until around 10. And then market close happened around 1300. So like basically you can see right here that price initially came down and then it pushed up. And then once it hit 10 o'clock, it started to come right back down, right? Because it moves into impulses. So usually like around 10, that's where the market starts to reverse. Because what happens is this first half is like where all the institutions and everyone's trading basically. This is where all the high volatility is as soon as market opens. High volatility here. And then as soon as everyone goes to lunch, when they come back, it starts to shift back in the other direction. So it happens every day.
This is at 10 o'clock, you said?
10 o'clock my time. So it'd be lunchtime yours. So it'd be like 12 around you. Yeah.
Okay.
Yeah. So just keep that in mind. This is because like even for our daily entry, if we're taking our daily entry, if it hits like 10, we don't like if we don't have a signal by that time, we don't take it anymore because that's usually where price will shift the other way. So just keep that in mind, like for future reference. But and we'll still look at the same entry that you were looking at.
Okay.
And I'm sure if you document your trades, you'll see a lot of your losses happen around that same time, around 10.
Yeah, who are you telling?
and that's how I know because I did the same thing. I was like whenever I take trades, in the beginning I would document my trades and I would figure out what's like the time area where I lose trades, and it was always around the same time. So that's how I know. And it's just in my way of looking at things to identify where these patterns happen, and they're always around the same time between 10 and 11. So
Yeah, I never thought about looking at the time. Yeah, I actually never not give it thought. It's usually right when I come back from lunch.
exactly.
Around 12
Yeah.
o'clock Eastern, which is like 9 a.m. your time. So between like well, that's a lie, not 12. It usually starts after 12:30 when
Mhm.
like the traffic starts picking up where I'm at. And I have time to actually pay attention, when it dies down, but it dies down after one. And that's when all this madness keeps happening. Like I just keep getting spiked out or just being a heavy range, like you see right there. It'll just not be going any particular direction. It's just at a standstill, like consolidating. And
Yeah,
I'm
because
like,
like what I was mentioning here too, like when we have these zones right here, usually if the institutions and people want to buy, they buy it early in the session, and then before market close, they sell off. That's why it goes up here, and then they sell off here, and it comes back down.
hmm.
So it usually moves like that. There's two different impulses for US 30. And this is just for me trading US 30 every day, because I trade it every day. So I understand how it moves throughout the day. And it always moves this way. It's almost always. There's going to be some days where it just keeps pushing up, like if there's something in the news pushing price in a certain direction. But if not, it usually just reverses the other way. So just keep that in mind, for future reference. But anyways, we'll go back to you mentioned you said 11 o'clock. So I'll just rewind it to that time right here, and then I'll see what you were looking at. You were using the snipe entry, right? Or the snipe
All
chart?
right.
Okay.
Yep.
So let me see. I got the pivots locked in right here. I'm going to draw my zones real quick. All right. So I'm going to try to find out where you traded from. And yeah, I can see just by looking at it how choppy it is. It's like super choppy throughout this entire area. So
Yeah, right.
yeah, I'm just going to draw these up right here. All right. Once we have those zones drawn up, I'm going to hide this real quick. I'm going to, so it looks like you took, okay, so you took this, was it this at 10:30 or was it one after it?
It was, let me go back to the screen. It was the candle that was literally at 1400 my time. So that'd be 11 o'clock a.m. your time today.
Okay, I'm gonna move forward one.
And timeout. Well, I was looking at it on the 5 minute time frame. That's probably why too.
Oh, okay. Let me just,
And when I answered on 5 minute, like I zoomed in, I was like, oh well, that's touching right there. And on the 10 minute, it's there too. So I guess it still is accurate.
yeah, let me just draw these zones real quick on here to see what you were looking at. That right there. So the difference with the 5 minute chart is you might have to use different stop loss TP parameters, because the whole 500 pip parameter thing is only for the 10 minutes, not meant for the 5 minute. Is that the same parameters you're using, or using something less?
Oh no, just now I have my chart on 5 minutes, but I entered on 15. Remember, I zoomed out because I was like, maybe I'm not seeing something. And then I see this bearish candle popped up right on one of the pivots. I was like, perfect. The only thing is it's a tad bit too close to the zone, but I already thought since it was a strong momentum already heading that direction. So I was like, I guess, it doesn't hurt to just get in and get out for 50 pips. Or sorry, it's like 70. What did I have it down here for? I think this is like 80 pips. I had 85 pips. That's fine. Or 80, sorry, 80.
Okay, got it. So which time frame did you make the entry on, so I can make sure that I'm marking it up properly?
15.
Because
Sorry about that. 15.
okay, let me go to the 15 now. So I'm here on the 15. I don't see an entry here off that.
That's 1400 right there.
So there's no rejection off the structure right there.
I think that was like my mistake. It wasn't a rejection off a structure. I literally just went through the first one that was, let me see. This is the first one I was like right above the structure, right before it hit the support. You want me to share my screen so I can show you what it looks like on my side?
Yeah, go ahead. You can, I think the button's right there if you want to pull it up. Let me stop sharing mine. There we go.
Okay. Right about here.
Let's see. Okay. So, you entered. I don't think that'd be an entry there because there's no zone, right? Or is there a zone there? Am I looking wrong?
Yeah.
Let's see.
Is it?
Yeah, try to or do you want to open a clean chart so that we can or if you want to draw your zone over it just to clean it up, because there's like you got so much stuff on the chart, it's kind of hard to see what you're looking at. You got like way too many indicators on. So turn off the EMA. And then okay, so you entered, let's see, turn on the pivots again. Let me see where you're located. Yeah, and then turn on the K2SR again. Let me just see if there was a zone there. Because it looks like you entered off that one. Let's see. So you entered off, yeah, I don't see an entry off there. Off the because you're entering off the well, your entry point's right there in the middle.
Yeah.
Which candle were you entering off? I'm just trying to see which.
Oh, I see what you're saying. Cause like I entered late. I didn't enter on the opening of this candle. I entered like right as the candle was like dipping.
Gotcha.
And so I entered like right literally like right here. And then technically it's supposed to be up here, but I entered like right here. But like my candle was technically is this one right here.
Gotcha. Yeah. So for that one right there, I don't see an entry because there's no rejection off the structure. It's only off the pivot. You would need a rejection off the structure and pivot. And it looks like, so if you turn the pivot back on, there's a rejection off the pivot, but there's no rejection off the structure because you can see that the wick right there doesn't go up to the top. See where that structure is?
Yeah, right.
Yeah. So that wouldn't have been the entry. The candle to the right of it would have been an entry though.
This one?
No, the one where it's rejecting off the structure. You can see where that yellow.
Oh, this one right here.
No, to the right. One more to the right. Right, that red one. See where the red one's rejecting off the structure?
Oh, I see what you mean. I see what you mean. Okay, yeah. Candle closed on. The wick closed on it. Okay.
Yeah.
And I think that was like my issue all throughout the week until like, you and I spoke the other day. It's like, oh, I'm not factoring in rejection off the structure. Like I am at times, and when I am like for example, say, oh crap, didn't mean to do that. I am at times, and when I am, it's like right here, for example's sake, it clearly works out.
Oh yeah. It went straight up there if you took that one.
Yeah, so it's like it's always like situational, like extremely situational. Like, even like right here, for example, say, structure was already right here, boom, and it always worked out. And it's big. It's like I don't even say it's in drawdown. It's usually like varies. I usually trail it. I always like to see my stop loss is usually always like 50. But as it goes up, I usually put a stop loss right here at the 50 mark, and then I'll trail like every 25 points until it's comes back down. But yeah, it was working out all week. I think now that this is pointed out to me, I see the mistake, I should say, to correct myself, is that when it was working, is when I was, like, let me draw this out really quick. So, I see it was working when it was done correctly, and when it was done incorrectly.
Yeah. I mean, it happens. Sometimes you get kind of excited. You see a trade and you're like, oh, that looks good. And
yeah.
You take it without even looking at the structure, because this happened to me today too during the live session. I actually had one loss today, just one loss, and it was because of the same mistake. I wasn't looking at it from the structure perspective. I was just looking at it from like one side. But yeah, just looking at it from there, that trade that you looked at the end, I don't think there was an entry there off that one. I mean, technically it would have been an entry, but you would have entered like really late because the
this one?
No, on the one at the end to the right of it, the one that you're looking at first. Yeah, so that entry would have been that one that actually stopped you out, because that's where the yeah. So let's go to your rectangle. Let's just extend them across the board so that you can see. Yes, just double click on that, and then just go to style. Oh no, not that right there. Go to go to style and then just put extend to the right. Yeah, so you can see right there. You can see like that candle that stopped you out was actually the entry candle. So like you entered like way too late. I mean, way too early, because you entered before there was even a setup there. But if you waited for that one, because it rejects off the red pivot and it rejects off the structure, you would have went straight to TP with no drawdown.
Yeah, I see it now.
Yeah. So like, if you set up like a TP stop loss right there, or I mean, short position from not that one, but the one above it. I mean, the one prior. Yeah, right there. So you can see it. There's literally like no drawdown. Just go straight down. And you would have went straight to TP.
Man, stupid moves. Well,
it happens. It happens. Like sometimes you have to make these mistakes to learn from them, because it's good that you're doing this now and you're running into mistakes now rather than later, right? Because you're actually getting through this and learning from it rather than keep going in the same circle.
Correct. So it's always when it rejects off structure. Like, let me see if I can find another example. This may not be the best example, but oh no, structure's right here. Never mind, that's probably not the best.
You can probably turn on your K2SRs to see if there's more structure up there, because there might be more that's around that area. So there's a couple up there as well. So like, or actually there's some down, or no, actually there isn't. I'm trying to see. Oh, actually, if you go there to the left, there's like one over there. So if you just make that a little smaller, or just delete that if you want to, you can see that those green candles that are rejecting off the structure and the pivot. So if you go
Yeah,
to the
right
left
here.
a bit, go a little farther to the left, because I can see one that's like pretty clear. You can turn off the K2 SR so you can clean up the chart a little bit.
This
So
one?
see right there where the zone, it's rejecting off the zone.
Yeah.
There's only one
Right
zone.
here?
There you go. So the one right next to it, see that green one on the left side of it? To the right side, it's like a little, yeah, right there, a little hammer. So
Yeah.
right there, you can see that the pivot or the wick is actually rejecting off the pivot and the structure right there, off that green pivot or that blue pivot and the structure. So that would be an entry right there. And you could erode that to full TP if you wanted to.
So, okay. And like, for example, okay, here's a good example. If I was to see this, and this is, even though I do my mistake now, I'm just letting you know so you can see what my eyes we're seeing.
Yeah,
Like,
yeah,
I would enter like off of one like this guy, for example, say, and
yeah. You're missing one more requirement. You got to make sure there's a structure there.
yeah, that's what I was saying. I realized like that was just my mode of thinking. Crap, at the time before I know it was correct. So this was where I guess you could say the bad habit would start. But this is where I would enter off of sold this because I see rejection and I see it's a little further away from the nearest zone. So I was like, okay, perfect. I can. Well, sorry, this one. I see rejection. It's a little further away from the zone, so I can get in, for a quick 50 pips because it's barely in the zone, and that's it.
Yeah. Or try on your K2 SR, see if there's an actual zone there, because there might be one there. Yes, there is no zone right there actually. So you wouldn't have taken that if that was the case.
Okay, so this was luck.
Well, this is how the original strategy was developed. Like before I had the structures, like before I created the K2 SR indicator, this is the original strategy where we would have rejections. But the reason why I included the structures is because like you said, it's luck because it doesn't always play out, right? Like you can there's because there's too many opportunities there. If that's the only thing you're looking for, there's like 20 opportunities there. But if you keep going down, you'll see that there's a lot of losses as well. So like the reason why we have the second requirement is to minimize those losses. Like there's going to be less trades, but they're going to be more accurate and a higher win rate.
Makes sense. Makes sense.
Yeah, because you could literally like you can take any trade that rejects off the pivot. That doesn't necessarily mean it's going to go in that direction because there's a whole bunch right there. Like if there's a lot of wicks on the chart, you can literally take like 100 trades, right? But the odds of it actually hitting are going to be a lot lower because there's so many opportunities there. But it's going to be hard for you to decipher, what's legit and what's not.
Would this be like a could be this right here?
Yep, exactly. That'd be one right there because that red candle rejects off the pivot and the structure. So once you have that, it gives you that double confirmation and it provides for a sell entry.
Okay, makes sense now. Okay, so I get it. So yeah, I get it. So now I see why the winners were winners, and then the losers, half the losers were lucky, and the other losers were instant like stop loss. Okay,
Yeah.
all right. So that brings me to the next ones I was going to talk about. So I jumped in on the CAD, and I jumped in a little late. Zooming on this guy. So originally, I just do the fib just to see the rejections a little bit better, but just to clean it up, I'll get rid of it if I need to. This is yours, right? So I was like, and I saw it a little late. So I was like, oh, let me see if I can get a, quick little late entry. Let me see, is rejections there? Okay. I was like, let me see if I can get a quick late entry. I don't know why I entered here, but when I entered here, like it was like solid. I was like, oh, perfect. But why did I choose to do that? I'm trying to remember why I did that. Oh, that's why. I think it was on the 60-minute time frame when I zoomed in. Yeah, right here. Boom. Because I saw this guy. Do you see it? It looks a little messy.
Yeah, it broke the structure right there out that green one, right?
Yeah, this green one right here. So that's what made me say, oh, okay, let me get rid of the fib. I don't really need the fib anymore. But yeah, this candle right here is when I saw the trend indicator. I was like, okay, cool. And then even on the, I'm mistaken, I think the MACD even had it going bullish at that moment. Yeah, momentum was weakening on the downtrend. So I was like, okay, perfect. I can hop in now. And then I saw it like showing rejection off of here, like off this channel. So I was like, perfect. So I could definitely get in right now then. And it worked out. But then like, it just rejected back toward me. I was like, it stopped me out at break even though.
Yeah. I noticed that too. Well, the thing with the JPY is that a lot of it, all the JPY pairs kind of pulled back like midway through because of I think there was some news that was released that pushed it down. But Yeah, I think it's going to keep pushing up, but that is a good entry that you identified because you identified the break and close path structure, you identified the buy signal, and that gave you, the confirmation to enter that entry there. So that was a pretty solid entry. It's just when you're on the 1 hour, you might have to adjust your TP stop loss a bit because obviously it's going to move a lot less rather than the 4 hour because the 4 hour is like 4 of those candles put together.
True, that does make sense. And then I had another loss today. Let me see what. See what that one is. That one was it Canyon? Was it NJ? Nope. Oh, GCAT. Okay. So it was. Oh, I even saved the screenshots. I remember you're like, oh, save the screenshots next time, make it easier to look at. Yeah, this is GCAT. This is GCAT. This is what I was looking at before I entered. This is literally at that moment. So this is at what 12:39. Right? And this is on the 4 hour. So yeah, the reason I got into this is because A, I saw my buy signal, and then B, I saw the MACDs crossing. So I was like, solid. And then I saw the rejection. This candle closed already. So I saw rejection off of the structure right here, headed bullish, and then I saw a little double bottom. So I was like, okay, perfect. This is all I need. But this made me a little nervous right here.
Yeah, the resistance, right?
Yeah, I was like that made me a little nervous just because it was respected right here and then respected once again, even though it like got shattered right here. But I was like, it'll be just my luck if I just get stomped right here.
Did you end up stopping you out, or did it?
Let me see what happened. I remember I stopped at hit my stop loss. But let me see literally how it played out. Okay, yeah. So it would be some profit. I got stomped
still
out though.
technically active right now.
Yeah.
Yeah,
So,
it's stuck at that resistance though, huh?
Yeah, so it respected it. Yeah, I remember. As soon as it got up here, it dropped right down. I think like right here. Yeah, it was yep, it rejected like right around here and stopped me out. Because I was like, if this backfires in my face, let me just push it up a little early. Plus, this is a lot. Like, this is 130 pips.
Yeah, no, that's a big movement. In GCAD, that pair is kind of tricky. I like trading that sometimes when it wins, but when it loses, man, it's a heavy loss because it's an expensive pair to trade.
I figured because I was like, even though this is just what the ATR came up with, I was like, I might just tone this down a little bit. But then, like I said, I just saw the double bottom, so I was like, okay, I'll just stand this for the next 2 years and then in 2025 or something. But there's that one, and then GA. I didn't enter this one only because in my brain I thought I did, but I got it confused with GCAD. But what was my thought process on this? It's pretty much the same with the GCAD. Zoom out a little bit. And I believe it was, yeah, I saw the buy entry over here at that time last night. It was already like that. At the time last night, price was already like right here. So I put a buy stop and buy stop triggered, and then went in profit earlier today and then got stomped out of break even again. Then I didn't notice just now that this zone was right here. I think I had it hidden on my phone.
Oh, gotcha. So you missed, it was at resistance. So it bounced right off the resistance, came back down.
Exactly. Like if I see the zone now that I'm staring at the computer, but I didn't see it at that time when I was just clean it up. I didn't see it at that time on my phone. My phone didn't sync up properly. It just showed the position and this zone and this zone.
Yeah, those zones they're really key because like if you waited for it to break above, then it would have shot. Like you can see right there on the left side, see where that green candle broke the structure on a little bit farther to the left. See how it broke the structure and it tested the next resistance. So if it broke structure right there, you could have taken a buy and then rode it up to that next structure right there, and then pulled out before it dropped back down.
Oh man, see him respected the bottom here. This is why I like G. G is like a little jerk to me. Like whenever everybody else trades it, they make money off of it. Whenever I do it, nope, never works out. And then same thing too. The MACD it showed it crossing, and I know it's like the MACD settings. It's like it lines up so perfectly with the trend indicator. Like as far as like the buys and the sells are concerned, it's like it always triggers like as a second confirmation, like right after like one candle after the EMA's cross. So as soon as I see it there, it's like boom, see, it just lines up right there perfectly. It's always in sync with it,
Mm-hmm. Yeah, exactly. That would have been good if that zone wasn't there, but it looks like that zone's pretty strong. So it seems like it like literally rejected off that red candle that.
Oh yeah, down. 1, 2, 3. Okay, yeah, you're right. It's been respected a lot of times.
It's a pretty strong resistance. Like I would take it if it broke above it, but just because it didn't break above it, I would have skipped that one. if it was like me that was looking at it.
So it seems like, is that the same thing I do with EJ? Oh, no. So it seems like what I'm noticing is just the one common thing is just respecting the zones when they come up. Let me get rid of that. So like every time, I get in a position, I think I took a G. Did I take a G? No, I just took a G. I thought I took, oh no, I thought I took a GJ, but I didn't. Yeah. So it's just, I guess that's just the common theme is just like respecting the zones. Like every time I'm entering a position, it's just like I draw my zones out. Usually like on Sundays and like Mondays, I'll draw it a little further. Wednesday, same thing. Draw them out a little further, clean them up or add more. But I guess it's like because and like I said, if I'm at home entering an Asian time, I enter US time on my phone. And sometimes they don't sync to the phone. The zones don't show. It'll just show like everything else but the zones.
Yeah, no, I have the same situation. It's such a hassle. It's an issue for for me too. If I never trade on my phone, but I mean for you, your options are kind of limited because you're at work. But I would recommend that whenever you take a trade, always draw the zones first. That'd probably be the most important thing because I've noticed a lot of times where I do have losses. It's because I misidentify the zones. Like I didn't notice that there was a zone there. And if I looked at it properly, then I would have known that oh, this is probably a risky trade to take.
Sure, that makes sense. And I think I have one more. Is this one more? Oh no, that was a Cadian. I was just showing that. I guess I was showing my way of thinking of that.
Mhm.
What was I gonna say? Okay, yeah. So back to the dirty 30. I guess I got the hang of it now. If you're wondering like what's the difference between like these, I coded like if you see a zone like this is a little bit better. If you see a zone like this and like this little orange one, I call this like a super key level. Like if it's been respected like once, like more than 4 times, like over here, and like over here, and like over here. So it just lets me know to back off and stay away from it. Like don't try it. Basically, like if I see a zone like this, it's like okay, it's brand new, but just be wary. But like this one, like don't even play around with it. Like it's pretty trustworthy, so use it like for a solid rejection for an entry.
Yeah, no, that's really smart that you did that because I've seen other people that do that too. They go on the higher time frame sometimes, and what they'll do is they'll go like on the 1 hour or 4 hour. They'll draw a different zone in a different color, and then they would draw the normal zones on a shorter time on like a lighter color, like how you did basically because you have like the stronger zones up there, and then you have the lighter zones for like the more current time frame that you're looking at.
Exactly. But so yeah, so just so I know, it's basically rejection of structure, and the wick has to be on, let's say like for this guy right here, rejection of structure. This is a coincidence that the wick is on the structure and the pivot. So could it be like this guy right here? Could we count this one?
No, because it would have to be a rejection off the wick, off the structure and pivot. So there's no rejection off the pivot there. It's just off the structure.
Oh, okay. Structure.
Yeah. So that entry on the right it's not a coincidence because that's the strategy right there. I think everything else that you've taken weren't really following the strategy because you have to like that green one right there to the left, that small hammer, that would be a valid entry.
Oh, okay.
Yeah.
I see. Because it's okay. Okay.
Yeah.
Could it be?
Go ahead. Yeah. Which one are you looking at?
Let me see if I can find a different example. Never mind. This is structure again. Okay, rejection structure. Okay. Never mind. I guess everywhere I look at it, it's always gonna be near a structure or something like that. So I guess that makes sense. Would this buy be a good one or not really?
No, because it would need to reject off the pivot. So it's rejecting off structure, but not the pivot.
Oh, same thing.
The pivot rejection is going to be the main thing. That's number one. Number two, it needs to reject off the structure. So if it doesn't fit both those requirements, there wouldn't be an entry there.
Makes sense. Okay. I guess that makes sense. All right, then I won't hold you. So I'm gonna spend the next few minutes just, I guess, drawing my zones a little bit better. Did I have an AJ? I could swear I had an AJ, or was it you? No, I thought I did. I did. Oh. Oh no, this is yours.
Oh, is that the one that we have running right now?
Yeah.
Yeah, the JPY pairs they kind of bounce around a bit, and then they looks like they're swinging back up right now as we speak. I think.
I could jump back in.
Oh, did you get back in?
I thought so. I was thinking about it earlier because I saw it last night. I was like, oh yeah, I was waiting for it to get down here, but my phone didn't send me the alert that this candle hit it.
Yeah,
But
rejected perfectly off it, huh?
yeah,
That's
I'm
fun.
gonna get back into that now. I see that.
Yeah, if it breaks that structure, it might continue pushing up,
And why do they take 100 years to like
right?
move?
The forex pair has been moving really slow. I don't know if you noticed that in the past
Yes,
couple of weeks.
that's why I've been staying away from them.
Yeah, that's why I'm just focusing on, well, not really focusing, but I'm trading mostly this US 30 because it moves way faster. And I don't really like holding trades for that long, especially if they're something that I'm not really sure if they're going to continue.
True. And you said is NFP tomorrow?
It is on Friday. Well, it's like this whole week. Like today, they release unemployment data, and then they're going to release like the non-farm payroll like on Friday. So Friday is a big day, but this entire week they're releasing the unemployment data for the most part. Like just like one news announcement like per day.
Okay, okay. Huh.
Yeah, the market's probably gonna pick up tonight. Like once we get to London session, it'll probably pick up like quite a bit as we get closer to Friday, and then Thursday it's gonna die down a bit.
Okay, I guess that makes sense then. All right, I guess I'll just go back to the drawing board. Oh, I did have one. What pair was it? Oh my gosh, was it GJ? I want to say it was GJ. It was let's see. No, Wednesday, nope. I want to say it was GJ. Let's go back to it. It was a signal. It was a pair that was completely like overbought. Let me turn this on. And I was getting a buy signal from it, and it was probably an NJ pair. Nope. I don't remember which one it was, but it was super overbought. And I was getting a buy signal. I'm like, when do I know when to like not like jump in for a buy? You know, but that looks pretty good. Oh, that looks pretty good actually. Oh, never mind. Yeah, no, no, that's not good anymore. But I was like, when do you know, like for example, say like this right here, or not bad example because it's actually it called it correctly going down. But there's been times where I would see it like give a buy signal and it's like it's already overbought. So it's like, how do I know it's just gonna break that structure? Because technically this would be like the new high right here.
Mhm.
So it's like, how do I know it's gonna go higher? If that makes sense.
I wouldn't necessarily look at forex pairs as being overbought because they can't be overbought. It's not just one currency. Like for forex pairs, they're one currency paired against another. So like the AUD versus the Japanese yen, it can't be overbought because it's paired against another currency, right? If you're just trading the Aussie index, then it could be overbought because it's a limited resource. But the OJPY, it's not limited because it's just whichever one's stronger than the other. Like for example, if the Japanese economy is crashing and the Australian economy is just continuing to push up, it can literally push up forever until there's an imbalance and then they start shifting in the other direction. So that like there's no overbought or oversold in forex. You can use that applies to like stocks, it applies to futures, it applies to commodities because for those specific assets, those have a limited quantity, right? There's only so many stocks. There's market cap for stocks, there's market cap for futures, there's market cap for commodities, but for forex, there's no market cap because there's literally you're not weighing anything against like you're weighing one currency against another, and it's impossible for one to be too strong against the other, right?
Yeah.
Like if the US is going to war with like Japan and the US is winning the war, the US dollar is just going to keep going up, right? The Japanese dollar is just going to keep going down. So there's never going to be overbought. It's just going to keep going in one direction. So that's like a common misconception with like forex. A lot of people like to use indicators like the RSI or the stochastics where they try to identify where things are overbought or oversold, but it doesn't work for forex. Like those indicators don't carry over to forex trading because it's different. Like that's why forex pairs are considered a ranging asset because they go back and forth. Like it never goes to one point where it's like, oh, there's too much market cap for this specific asset because there's no market cap. It just depends on like what's stronger than the other at that time. Like for example, here you can see from the chart, you see how it goes up and then it goes down from the left side. Like when price is going up, that just indicates that the Australian dollar is stronger than the New Zealand dollar. When price goes down, that means the opposite, that the New Zealand dollar is stronger than the Australian dollar. So it just goes back and forth. It's a ranging asset. There's no overbought or oversold features for a forex pair. Do you get
That makes sense.
Yeah.
All right, so
Yeah. Because if you're just trading like one index, like if you're just trading the Aussie dollar, then obviously that can be oversold or overbought because it's just one asset. But this is a paired asset, so it can't be considered overbought or oversold.
Can metal be overbought?
Yeah, because that's a limited asset. So if you're trading gold, then there's only so much gold in the world, or there's only so much gold that's available. That's why, like, when you buy gold, like if gold's in demand, if you keep buying gold and people keep buying gold, the price of gold goes up, right? And then if
Yeah.
and then if they sell gold, then the price goes down. For a forex pair, you can't like keep buying odd USD and it just keeps going up, right? Like you're not pushing price. I think that's a misconception a lot of people think too. They think that if you're buying odd USD, you're literally buying the asset, but in reality, you're not really buying it. You're just going with the direction of price.
Okay. I
Because
see.
because like for another example, like Bitcoin, like how they pump Bitcoin.
Yeah, how they just recently did
Yeah.
it.
Well, the price of Bitcoin goes up because people are buying it, right? That's the reason why it's going up. The reason for odd NZD to go up isn't because people are buying odd NZD. It's just because the Australian dollar is stronger than the New Zealand dollar. You kind of get what I'm saying?
Yeah, I see. So it's no way possible as long as
Yeah,
I
it's
see.
it's impossible to be overbought or oversold because there's no market cap for this pair. There would only be market cap if you're only trading like one currency, not a currency that's paired against another. and then
Honestly.
and then that would fall under the futures market because if you're trading the Aussie index, then you're going to be trading a future, not the actual pair, right? It's going to be totally different.
Okay, that adds up. That adds up. Okay, I get it. I get it. All right, so I'm gonna start marking on my charts before I knock out tonight. Maybe stay up a little late for a London session and see what I can get out of here.
Uh,
Or, well, I actually want to pick apart. Let me go back to it. Pick apart the 30 level. Does the strategy also work with SPX and NAS, for example, say?
the snipe strategy.
Yeah, does it work with the SPX and NAS? I would assume so.
Yeah, it works for everything. It works for any asset. It's not just for US 30. People use it for the Aussie 200. People use it for the S&P. People use it for the Nasdaq, UK 100. It really depends on what you want to trade it off.
Okay, I've actually tried it on the 4 hour time frame with GJ for a day, and it actually worked out pretty well.
Yeah,
But
yeah, yeah. If you trade it on something that's very volatile, then it'll work perfectly fine because it's based off momentum. So if there's momentum for that specific asset, you can trade it.
okay, we'll do. I'm gonna start and look at it on all time frames then and see what I can get. Mainly, I'll do it on the London pairs just because they've been giving the best of luck this week.
Yeah, I mean, it would just depend. Like, find one that you like find the time frame that you like, and I would just focus on that because you'll see that they move totally different. Like if you're trading S&P on the 1 minute versus like the 1 hour, you're gonna see like way different movements. So what I recommend is just find one that you like and then master that. That's why for me, I only trade on the 10 minute because that's what I'm good at, right? I don't go on the 1 hour, I don't go on the 15 minute. I don't try to like learn everything because like, it's like that one saying, like if you try to be the master of everything, like, or it's called um, a jack of all trades. And if you're the jack of all trades, you'll be the master of none because you try to do everything, but you're never good at one specific thing.
That
So
makes sense.
you should focus on like one time frame and one asset, and then just get really good at it, and then you can just keep killing it. I mean, like for me, you've seen that I only trade US 30, and I kill it every single day because I know how it moves.
I'm
So
gonna I'm gonna try to figure out a time frame that works best for me then.
yeah. So find a time frame and then find an asset that you like and just trade that every single day. Because the more and more you look at that asset and that time frame, everything is just going to clear up for you because you're going to see patterns every single time because the same movements happen, every other day or whatnot.
Perfect, perfect. All righty then. Well, thanks, sir.
Yeah, definitely, man. If you have any other
Another
questions,
day.
reach out or send over your charts, and I'll be online for a bit, so I'll be here.
Cool games. If you're gonna have the live link up still.
I'm probably not going to be on live because I got to do some. I think I have another meeting actually at 8. Yeah, so in an hour, I'll probably be on live at 8. But
Okay.
I'm not sure if they want to do a public room. So if they do, then we'll be on live. If not, then I'll just be available through Telegram if you have any other questions.
Okay. I'll just message you then if anything.